Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the fact that the bull market support band is now above $29,000. If you guys like the content, please subscribe to the channel. Give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. Now, I'm making this video about 1 minute before the weekly close. You can see that in fact right now the 20-week moving average right here is 27,872, but I'm anticipating it going above $29,000 in the next minute or so. The 21-week EMA currently is $30,000, 817. I imagine that one will go up at least $1,000 or $2,000 as well. So we're going to be waiting for just 1 more minute and we'll see where they are. This is somewhat significant considering that it wasn't that long ago when the 20-week moving average was all the way down here at $10,000 in October, and just a few months later the 20-week moving average is at $27,000. Right now it's at 27.8, but we should be coming in on the weekly close in a minute. We'll also be discussing some of the other moving averages as well in this video. So you can see now the 20-week moving average ranges is at 29,560. We just started a new weekly candle. The 21-week EMA is at 32,132. So the bull market support band, if you're curious, ranges from 29,561 up to 32,133. If we dropped to that level, we would still maintain the integrity of the bull market, as crazy as that may sound. Now, we've only tested the bull market support band once this bull run. You could argue we've tested it twice. It depends on what sort of tolerance you want to say we have to be at in order to call it a test. This one was surely a test because we actually had wicks below it. This one came close to testing the 21-week EMA, but it didn't come all the way there. If we take a measured move from, say, the bottom of this wick or so, we were within a couple percent, 2 or 3% or so of the 21-week EMA. But regardless, we tested it here, so we did have a decisive test of the bull market support band back in September and early October, and then we blasted off, and we haven't really looked back ever since. Now, there's no guarantees we're going to test it in the short term. So far, we could argue that this cycle, it looks more like the one from, again, 2013 than the one from 2016, 2017. So if we look at, say, the BLX, and we switch this over to the weekly time scale and look at the bull market support band, so far we're looking more like this cycle over here where we tested it and then we just sort of went up for a while before testing it again. Last cycle we went up, we tested it, we came back, or we went down, we tested it, we went back up, and then we just kept testing it to make sure everything was okay, and then ultimately it led into our final parabolic move, and then when we came back down to test it, we did not hold it, and then it held as resistance for the duration of the bear market. So what I would say is right now, this is heading up quickly. You can see the 21-week EMA is starting to bend over a little bit because the 21-week EMA will react quicker to drops in the price. And at some point, whenever we do have a correction, whether it's here or later on, then the 21-week EMA will sort of roll over like this, and then the 20-week SMA will cross it, and they'll have another cross, just like they've had crosses in the past. Okay, so that's ultimately, at some point, we'll be looking to see that happen. Now, if you look, again, we have to do this every week just so we're staying on top of everything. If you look to see the time between tests of the 20-week moving average, now that we're going to be pushing into March at the very least, we are testing some territory that hasn't really been tested that much in the past. If we take a measured move from, say, testing the 20-week here to testing it over here, it was about 182 days. From this point to where we currently are, it's about 140 days. So theoretically, we could go another 42 days and still be above the 20-week moving average for the same amount of time that we were above it in 2019. Another 42 days out, if we were to go out to 182 days, that would look to be testing it in early April. However, even though early April still seems like a long ways away, in the cycle before the last cycle, we even had longer time periods between tests. Here was a test here. We did not test it again for 224 days. So if we were to go 224 days from this point, we would be looking at closer to May, mid-May. And I believe that's probably the longest we've ever gone. Normally we just look at this cycle and compare and say, okay, well, this one was about 3 months between tests. This was about 2 months between tests. Here was another one, which was about 3 months. This one was about 2 months. Another 3 or 4 month one, another 2 month, and then finally this one was about 4 months or so. So this cycle so far, we're going a much longer period of time between tests. You can see that we've already gone longer than we did at any point last market cycle. So again, so far, this market cycle seems to be emulating the one over here more so than the last one. So we'll keep an eye on it. And by the way, if it continues to emulate it, okay, so this is something that people might not want to hear, but if it were to continue to emulate it, then it might actually mean breaking below the bull market support band. It doesn't necessarily mean that we're going to go into a multi-year bear market. You can see here we broke below it, and we actually broke down significantly below it, and we had closes below it as well. This one we even went 30% below it, but ultimately a month or two later we sort of picked ourselves up by our bootstraps and continued on. So the bull market support band last cycle was a systematic test. So far this cycle, we've tested it at least once. We said if we hold it, we're likely gonna, sentiment can change on a dime, and it did. Did not expect it to go up to $58,000. I'll grant you that, but it did change on a dime. And you could even argue that we may be tested it a second time, depending on whatever your tolerance you're okay applying to what you would consider a test of the 20-week moving average. So now we have a pretty bearish candle, right? A pretty bearish candle where we've essentially erased the entirety of the last candle. Let's switch back over here. So we've essentially erased the entirety of what we did last week. So what I would say to the people that are new is corrections in crypto are par for the course, and you will get them. And so a $45,000 Bitcoin is still very bullish, right? I mean, imagine telling someone back in October that you would be sad that Bitcoin was at $45,000. They probably would have been looking at you, really, really in a very strange way if they heard you say that. And in fact, our weekly open on February 8th was at $38,000. So the fact that we're at $45,000 is still relatively bullish in, say, the grand scheme of where Bitcoin is in this cycle. With that said, there will be times where we correct, just like we corrected in January. We had a correction in January that brought us down 31% or so. So far, this correction has brought us down a modest 22%. Nothing to get out of bed for, but of course it's going to turn a few heads. Now, something we should also talk about is, we might not go down to the 20-week moving average in the next few weeks. Although it is certainly a possibility, there's certainly no guarantees. If you look at the 50-day moving average, we can look towards that. That is where we ultimately found support after the last dump, and we're not that far away from it now. From the current price, Bitcoin would need to dump another 9 or 10% or so, and we would in fact be at the 50-day moving average. So it would not be that far-fetched for us to go to that level. If you're curious, the 50-day moving average is at 41,269. It's going up by about a couple $100 every day. Obviously, it is starting to level off. It's not going to take too much longer for the 50-day moving average, in fact, to be at our last local top. So, it would be somewhat interesting if say this continued to go up and hit 42K, and then this dumped to 42K, and then that was sort of a rebound point, being the last local top, being the 50-day moving average, which is where we bounced last time. This would be, if we were to have a correction, a sustained correction, this would be the most bullish scenario I could see, would be a bounce off of this. A more bearish scenario, but still relatively bullish in the grand scheme of the market cycle, would be going back down to our Bitcoin bull market support band, which, as I said earlier, now ranges from 29,553 up to 32,119. The exciting thing about this is that it's only going to take one more week, and the 20-week moving average will be breaking $20,000, which is kind of crazy to think about, that the 20-week moving average is going to be breaking $20,000. But give it one more week, and it should be there. So we do these videos not because I think we're imminently about to drop to the 20-week moving average, but it's so that if we do get a drop to the 20-week moving average, you don't necessarily think this is the end game, right? It doesn't necessarily mean that the show's over and we'll see you again in a few years. Holding the line at the 20-week moving average has historically been where the bulls really try to fight, and this is where they will come out and try to hold the line if we make it there. We will go there at some point. Of course, by the time we get there, as I said before, we'll have a few more gray hairs because of how long it's taking. We will go there at some point. Does not mean it's the end of the cycle or anything like that. We would like to hold the line. Another thing to consider too, though, is even in a bearish scenario of not holding the 20-week, since we're emulating the cycle before more closely than the last cycle, even breaking below it doesn't necessarily spell disaster. I would say though, breaking below it would very likely lead to a major sell-off of altcoins. So that's one of the reasons to sort of minimize altcoin exposure if you're breaking below the 20-week, because they can get absolutely slaughtered at that time. But hopefully this video is useful. Hopefully you guys like these updates on where the bull market support band is. It's quite the journey. If you want to be part of the journey every step of the way, subscribe to the channel. We're almost at 150,000 subscribers. Would appreciate it if you guys would hit that subscribe button. Give the video a thumbs up if you enjoy the content. Remember, we also have the premium list sale. You can sign up for that. You'll get access to the TradingView indicators, the weekly reports and videos, the Telegram alerts channel, the risk dashboard, and more. So if you're looking for exclusive content to help navigate this market cycle, make sure you check out that. You can find a link to that sale in the description below. Lock in the lower rate. Thank you guys for tuning in. I hope that was useful. I'll see you next time. Bye.